Hey guys, I jumped the gun a little bit, and I'm okay with it. Hey, welcome back. This is another episode of the Rags to Riches $500 5-year challenge, and I decided to jump the gun a little bit. So let me get my face out of the way, and I'll kind of walk through what I did. So first things first, I did live trade this morning. Got my butt handed to me. It's just one of those days I was trading low float runners and the market just decided to not play nicely, and that's okay, right? You can see here, this is the most important part. The realized losses from today are $12.22. Now that was 4 out of 5 losing trades, and that's because I got late fills and stuff like that. So overall, net negative, it's okay, because this number is 1% of this number. It's not 50%, it's not 90%, it's 1%, which means I still have 99% of my portfolio to trade with, okay? However, it is the end of October going into November, so I decided to play a little bit of a numbers game. So every contribution that I make of $500 for every month, I can invest $350 into dividends and growth positions. So in this case, I'm just offsetting that a little bit because of one specific milestone that I've achieved, okay? Or will have achieved, I should say. So here is the portfolio that we're looking at in November, okay? So when I make this next $500 deposit, that will leave a total contribution amount of $1,700, which means I'll have $1,190 to invest with. And the speculative allotment at this point will be 510. Okay. I currently had 360 and I'm adding $500 into my account. So all I'm doing is taking this speculative allotment and I'm investing it early into the dividend stuff. So this way, when November 1st rolls around, I don't have to invest this money into the dividend stuff because I already have. So I just kind of moved up a little bit, and all it means is that I just won't speculatively trade for the rest of today, obviously, which I hit my max loss and I'm okay with, or Monday, or Tuesday or Wednesday. Now, Thursday, Friday, I'm not going to be here, so I'm not going to be in the market that day anyway. So there's really no need for me to try to trade aggressively over the next couple days anyway, plus the weekend helps. So I figure why not just take that money that I would normally just have sitting in my account, put it into some dividend positions, and get those ex-dividends rolling, specifically because of the timing of things. But what's important to note here is that I'm just offsetting this initial contribution to the investments from my speculative amount plus profits. Okay, so I've just taken $500, I'm sorry, $350 that I would have normally put in on November 1st and just use those early. Okay, so let me get this out of the way and I'll walk through what I did. All right, so CLIP, KLIP was the aggressive Chinese ETF one. They announced their ex-div date to be October 30th. Now, it's not here on stock analysis, so you'd have to look for it. Webull just kind of told me that it was happening. It told me late last night, so I was like, okay, I'm going to buy some more. I was hoping to catch a dip on it, but it didn't quite happen. But either way, it's a monthly payout. The dividend is going to be 69.66 cents or something like that per share, and I had 6. So rather than collecting the $4.18 that provides me, I now have 12 shares, so I'll get about $8.28 or something like that. So I've doubled my holdings just by buying a few days early, okay, or my dividend payout. And what that does realistically is it takes all 12 of these shares and it's going to reduce their cost basis by that 70 cents, okay? So that's the advantage of good timing. So let's go to the next one, Johnson & Johnson. This is a quarterly dividend, but I know that their record date is November 21st, which is after November 1st. So I have to use November's contribution to buy that additional share if I wanted to. And that was kind of planned out a long time ago, was that I would buy this one in November. And that's what I did. So if we look at the chart or the portfolio here, you can see that I have 3 shares now. This dividend is going to pay $1.19 per share. So that is $3.57. Sorry, it took me a minute on that one. And that's paid out quarterly, so then 3 months after that, I'll get the next payment. But I wanted to make sure I was in here before November 20th, especially given the price of this this share, okay? So I just wanted to make sure I got that third one. It's a nice, stable growth dividend position, so I don't really care too much about rolling it. I just wanted to make sure I had a third one before that quarter was ended. All right, next one up is JEPQ. So this one is the JP Morgan Nasdaq equity ETF, just dividend position here. So basically, when I bought Clip and I bought Johnson & Johnson, I put $100 into Clip and I put $145 into the 1 share of Johnson & Johnson, which left me with $105 from the original $350 that I plan to invest. So JEPQ is just under 50 bucks minus, $4.65 or something. So it's about $5 cheaper, right? So I have $5 sitting aside. So that means realistically I have $60 left. Okay. And then I bought O, which is $49. So I take that $6, I take this $1. That is $7 surplus. And my goal was to hit 510 for my speculative amount. So I'm only really sacrificing $3. And, I could have just done that by not trading today. And then I would just be at a net surplus. So the only drawback to buying early is that A, I don't get to trade for a few days, and that's okay because I don't really plan to. And B, I'm $3 short on my speculative amount for next month. But the advantage is that I get another $4 in dividends from just being into Clip early, $4 plus. And I also have my my Johnson & Johnson ETF secured, so I get an extra dividend from that. That's guaranteed. As well as this one here for O, because this one has a record date of November 1st, so I'm guaranteed to be in by then as well. So I'm okay with this little trade-off, and that's kind of the name of the game, is just identifying the advantages and opportunities and just maximizing them. And that's all we're doing. We're manipulating time a little bit on this. So just wanted to kind of make this stream to announce that. Now, next stream will be a little bit more educational. This one I'm just kind of summarizing things because of the the time factor here. So I do have to end this recording here. It's only like a 6.5, 7-minute video, but I'm trying to keep these also digestible because I don't want to put up an hour-and-a-half stream every time. So for those of you that were on the live trade stream, awesome. I loved having you there. We went over fair value gaps and engulfing confirmations and stuff like that. It was just a wonky day in the market. So overall net loss is 1%. That's okay because I'm getting that back and then some. All right. So with that said, I'm going to end this recording and I appreciate it. I'll see you guys next time. Enjoy your weekend. And as always, please feel free to ask questions.